Hello and welcome back to another episode of Stateside Market Report with Bryant Naylor, Tim Robinson. I'm Tim Robinson. That's Bryant Naylor. Brian, how are you, sir?
Doing pretty good, Tim. How are you?
I'm good. Full transparency, I just got off my bike and I might have a little bit of a hat head. Nah, we'll be all
Uh,
right. So I'm looking my best. I'm just trying to show up for the folks and give them market news. And market news is a little bit crazy. So what is it called? The bank.
Silicon Valley.
There you go. SVB. Crashed. Bank crashes. We're back, Bryant. Bank crashes are happening. So I don't say crashes. A crash happened and the government took over. We have a failed bank in our midst and people freaked out for a minute, but now apparently they're over it. So we're not going to talk about that stuff because we're not qualified to talk about bank runs and stuff like that, unless you are secretly and I don't know.
I'll keep that a secret, but I will
Okay.
say that in 2022, I mean, it was like an old-fashioned bank run. Like I didn't know that stuff still happened. You know what I mean? Like people were in line like to remove their billions of dollars from these this
Yes.
bank had like it was like 122 billion dollars worth of deposits. That's insane.
Yeah,
And,
yeah, an old-fashioned bank run like that. That's really what it was. It's a bank for rich folks. Like they do a lot of venture capital. They were
yeah,
doing some very high risk stuff. I know they banked a lot of wineries, and there are a lot of very rich people
60%
with a
of like
ton of
medical
money.
startups or something.
Yeah, yeah. So we're not going to get into the reasons why that happened, but the results of that are very scary for Wall Street. So everyone started freaking out that 2008's happening again, and then obviously that spirals into a housing crash, and then the weekend happens, and everyone's. I mean, sorry for the people that might have lost some money, but everyone's kind of over it. So it shows that, the Dodd-Frank Act and all these things put into effect in 2008 are very much helping regulate the big banking industry, but things still happen. Still poor decisions are made, poor management is in place. I don't know anything about the management structure of SVB, but it did send a ripple through the market. Everything kind of tanked at the end of last week and then bounced back up pretty high as of yesterday and today. So it looks like we're back on track. But that plays into some other things that are happening on the macro scale. CPI data came out and it's in line with what experts were saying. We're not experts, but it's kind of, I don't know, makes the experts happy. So that's a good thing in terms of
Yeah.
inflation.
No, no,
Inflation is
no surprises either
no
way.
surprises.
That's
There we go.
yeah, good. I'd
Yeah.
rather have it in line with what they're already predicting because that means, these banks and these lending companies, they all have this a plan figured out based on these expectations. And as long as they stay consistent, not going to be expecting anything too crazy to happen other than a little bit of jitters that go around. We saw interest rates take a little bit of a hit. They kind of went back down a little bit. Now they're heading back up a little. So we just don't really know. Don't really know. Uh,
The classic.
yeah, yeah. Just all you can say is that we've heard people asking the question like, well, if the bank is collapsing, does that mean the housing market's going to collapse? No, it's not. It's they're not related. Two different, completely different issues, right? It wasn't nothing like the 2008, 2007, whatever leading up to that time frame. So
Yeah, it's not subprime mortgage related. It's a weird decision made by one individual bank with a lot of money. And I don't think it's systemic of anything else, like that. It was a kind of one off, hopefully, and hopefully regulators will step in and get it straightened out and people won't lose too much money.
yeah, and it's a good reminder to maybe not stick all your eggs in one bank.
There you go. Yeah. Yep.
Maybe
That's fair. Fair point.
yeah,
Especially if you have billions of eggs, maybe spread
for
those
all
eggs out
those
a little bit.
billionaires listening to our month
Taking the world by storm.
our weekly report, just in
Ryan, how
case.
dare you?
Uh,
How dare you? You don't know who tunes in. Billionaires left and right. Yeah, and so I mean, more on the interest rate stuff. And again, we promise not to bore you with this every single week, but we haven't talked about it in a couple weeks. Rates are what they are. They're kind of mid sixes, low sevens. They fluctuated. They're getting a little bit better right now, but then March 22nd, the Fed is going to give its used to be expected 50 basis point raise on the base rate. Now it's expected by people smarter than us to be 25 basis points. So that's still increasing, but last year we saw like 5 or 6 75 basis points increases. So it's increasing slower. And this just kind of shows that the Fed is gaining confidence that their policies are putting a damper on this inflation thing. So inflation numbers are, like you said, there's no big surprises. It's not like drastically dropping like, oh, we hit the magic number and now we're, getting back to normal.
That's got its own problems, right?
Right. Yeah, exactly.
This
Exactly.
needs
So
to be a soft landing. And they keep saying soft landing. This is along those guidelines, right? This is what they're
totally.
predicting. These are along the lines of what they predicted, which is good, right? Either way, if it wasn't working, then we're going to expect bigger jumps. If it was working too well and inflation's lowering too rapidly, that's got its own issues, right? So
Yeah,
it's yeah, it's just a process that we have to go through at this time.
it
So
is. And I think to that end, so I think, we talked about this a few weeks ago, but I think we need to accept this as we being people that are looking to buy and sell houses, we being people in the real estate sector, we being investors, we being primary buyers. This is the new normal for the time being. There is
mhm.
nothing that's happening anytime in the short term that's going to drastically drop interest rates and we're going to be back in the fives and fours. There's nothing that's happening, most likely, unless we get some kind of crazy bank run that's going to knock them up into the eights and nines. Like we're looking in the sixes and sevens for the foreseeable future, with a few little outliers that can be in the fives. You can buy points down to get into the fives for certain products and things like that. But I think that it helps to just kind of zoom out and just be like, all right, this is the new normal. This was normal for decades. 2 and 3% interest rates are not normal, and we just need to move forward. We as a general populace, like there are other problems in terms of housing shortages and bidding wars that we're back into now. But I think if you are in a position where you're looking for a new house or you're looking to consider selling, there's obviously a lot of factors at play. But if you're waiting for something drastic to happen, I don't foresee anything drastic happening. It's going to be a lot of little bouncing around all year, probably into 2024. And at some point,
Mhm.
I personally think it'll go lower, but that some point is so far in the future. And I don't mean decades. I just can't look that far in the future, at least a year out before we see any sustainable dip. Um, in my opinion, again, people way smarter than me are saying different stuff, but that's kind of what I feel.
Well, it's some people are also right in line with what you're saying as well. So it's economics. There's all these different. Everyone has their hands in the pot.
Yeah.
There's all these different. What do you want to call them?
Cooks in the kitchen
Yeah,
theories.
different models, different things. People, different. You know, I don't know what I'm trying to say, but different. Everybody has different opinions, basically based on what their models are saying or predicting, and
Right.
what they're basing their information on. So it's hard to say, but I come along the line you are thinking the same thing. Like it'll be rocky for a while, but I think eventually rates are going to have to come down at some point. They're up right now because they're trying to slow down the economy. As
Right.
soon as the economy starts slowing down a little bit, then rates will come down. So that's kind of the basis of the whole economic model of interest rates and inflation. They follow each other. So one goes
Yeah.
down, the other goes down. So
Yeah.
yeah,
That's where we're at, folks. That's
yeah.
yeah, with the big sigh. That's kind of where we're at. Yeah, I mean it's not as exciting talking about 6.9, 7% interest rates as it is about 2% interest rates, but we're not there, And so what do? We just don't buy houses anymore? No, we change our strategy and we do different things.
Yep.
So this will be our actual market update. We're not going to bore you with more numbers next week unless something goes crazy, which hopefully it won't. I'm all about smooth and steady, nothing chaotic. Just get things back to normal, and we'll be good. I think next week maybe we should go into the other two contingency which we teased last week. We did inspection. We could talk about financing and appraisal, and just kind of continue to bring you hopefully valuable knowledge about how to understand the macro economic policies in the country, how that's affecting interest rates and your purchasing power, and the actual process of buying and selling a home, because there's so much to know that is just not talked about until you're in the midst of it, and that's not the ideal time to learn this stuff. So hopefully this can be a resource for you to send people to check this thing out. Hey, you want to know what an appraisal contingency is? Go watch those two knuckleheads. They know what they're talking about, and how that plays into the market here in DC, Maryland, and Virginia. So that's a teaser. That's what they say, Bryant. I don't know, you're like an influencer, so like, is that what they say in the industry, like
It's
a
like, yeah,
teaser
like
for next week?
kind of a tease. Yeah, kind of a
The
tease
tease, yeah. So
for
we're teasing you for next week.
yeah.
We're teasing you
You're,
with contingencies.
you're
Huh?
Tim the tease. Oh boy.
Oh, I don't want that to stick. No, let's not go with that. That's worse than smash that subscribe. We talk real estate too. All right, everyone, we really appreciate you tuning in. Hopefully, our our ramblings about the market update this week have been somewhat helpful, or at least not confused you more. That's what we're here for. Bryant and Tim, here to not confuse you more. That should
Yep.
be our tagline. And
Yeah.
next week we'll talk about stuff we know more about. How about that?
Absolutely. And yeah, at the end of the day, chaos this last week, but nothing drastic is happening. So
Yeah.
nothing to worry about. I
Everyone
guess
chill out. Everyone chill out. Just relax.
knock that out in about 3 seconds. All right,
Yeah.
cool. All right.
Thanks for tuning in, everyone. Until next time, Tim Robinson, Brian Naylor. We'll see you next week.
Thanks, everybody.